Inventory is increasing. Price reductions are climbing too as buyer demand backs off with higher mortgage rates and uncertainty in the economy. Because it's May, though, and this is when people buy houses, the median price of homes in the U.S. hit a new record high this week, too. So that shouldn't be as surprising as it sounds. We can see the early stages of this market normalizing, yes, but we also are hitting the normal seasonal peak of home prices. The median price of single-family home in the U.S. this week rose to $435,000. We're getting really close to the peak price for the year, sometime between now and the end of June. Normally, in pre-pandemic years, home prices peak in June. In 2020, as that market was just starting to go nuts, prices didn't actually peak until mid-August. Last year, with the frenzy still on, prices peaked July 15. But based on all of that history, we should expect 3 more weeks of home prices climbing. June 5th, somewhere about $440,000. There's a little noise in those prices, and they'll bounce around a little bit around the top as acceleration slows before they crest and decline in the second half of the year. But that's really what we should expect for home prices. You'll note the light-colored line here, the price of the new listings. That's the cohort of homes that get listed newly each week. Because it's leading, it crests generally 3 to 4 weeks prior to the full market. The price of the new listings peak each year in April or May, with the median price of the new listings now at $425,000. It's down from $429,900 last week. So that indicator's probably peaked. So taking all that together, this is why it looks like home prices still have a few more weeks of inching up. The new listings just peaked last week, so a few more weeks of inching up. If, for example, though, the median price of homes in the U.S. falls next week, in the week after, that'd be a real signal of cooling. That'd be the earliest peak of home prices we've seen during the year in a decade. So I don't expect it yet, but we're going to keep a lookout for that to see how quickly the market is absorbing the mortgage changes. Available inventory of single-family homes unsold on the market increased this week to 318,000. That's up 4% from last week. So 4 to 6% weekly growth in available inventory is really the story for all of May. It's going to continue in June. Last year at this time, we only had 313,000 homes on the market. So now we have year-over-year inventory gains. This is the first time we've had year-over-year increase in inventory since 2019. The available purchase inventory has been falling each year for a decade, as Americans have turned about 8 million or so homes from resale into rental investments. So the only times inventory has increased year over year was 2019 and starting again right now. 2019 was the after effect of rising rates in 2018. So you can see on the chart here, 902,000 homes on the market mid-May 2019 versus 850 the year before. So this implies that we have at least a year of rising inventories in front of us now. So you can imagine that by next year, we might be in the 500, 600,000 range. That'll be significantly more selection for buyers, but it'll actually still be fewer available homes than any year prior to the pandemic. So that's the context of inventory as of right now. The important perspective to keep in mind as we watch the impact of higher rates hit home buyers and sellers, like that's really that inventory perspective is really what we want to keep in mind, because inventory has been in such a crisis shortage for so long. There are lots of buyers who've been shopping for a long time. They've been losing bidding wars. They have their cash lined up and their financing in order, and they still want to buy their house. So they're still buying. We see this demand in the immediate sales tracker. This week, 25% of the new listings hit the market and went into contract essentially immediately. That's just over 24,000 total listings. So 25% of homes taking offers immediately when they list is still crazy high demand. It's down from a peak of 33% in March. Last year at this time, it was 29% of the new listings went into contract immediately. So you can see we're going 100 miles an hour down the freeway. We take our foot off the gas. We're still going very fast. Peak listing weeks are still a month off in June. And so as we have more new listings, we'll generally have fewer bidding wars as buyers have a little more selection. Last year in June, 25% were immediate sales. I think we'll probably be under 20% by next month. Fewer than 20% of those new listings getting immediate sales, taking offers of bidding wars. Still a lot, but notably fewer. As that change happens, it'll start to feel much more anxious for sellers, but less anxious for buyers. That the anxiety will shift to the sellers who overpriced a little too late in this cycle. So, and we can see that because price reductions are climbing rapidly across the country right now. I've been using this annual price comparison chart to show price reductions compared to last week, also compared to last year, and compared to normal years. Each line here is a year of curve of starting with fewer price reductions increasing later in the year, and then falling again for the holidays. Price reductions jumped from 19.8% last week to 20.9% this week. So almost 21% of the homes on the market have taken a price cut. That change from last week is really palpable. It's the biggest weekly move in a long time. That's why on Twitter, for example, you can see lots of anecdotes by observers in their local market saying, wow, suddenly a lot of price cuts. And if you're listing your house right now, don't be fooled by January's bidding wars or March's bidding wars. You can see how quickly the dark red line here is climbing each week. And you can see how much higher it is than last week at this time. But we're still a long way from normal being a third of homes on the market taking a price cut. If this trend continues, though, we'll be back at that normal range with maybe like 35% of homes on the market with price reductions in, say, August. That's not a bad market. It's not a cold market, but sellers who thought they were going to be, out with the bidding war day one, that's going to be scary for them. Okay, that's the data we have for this week. Home prices in the U.S. hit a new record high as inventory starts to build. Finally get a little selection for the beleaguered home buyers. We've been doing 100 miles an hour on the highway and the foot is off the gas. So we're still doing almost 100 miles an hour. The challenge in this changing market is going to be felt most acutely by the sellers who have overpriced and missed their window. Some of those sellers are going to get lucky and get their offers. Some of them are going to panic. So here's hoping you're using your Altos Research data, your market reports with your buyers and sellers right now, so they're not surprised. If you don't have your own Altos reports, go to altosresearch.com right now and just sign up. Grab the professional or the team account with us. Let's get that data to your customers right now. There's a link to sign up in the description below. join us. Okay, more next week.